Good morning, good morning. How's it going, ladies and gents? Glad to have you with me this morning. It definitely is fall outside. It's creeping in closer and closer and closer as each day passes. But I love this weather. Love this weather, love the fall weather. Love when it starts to get a little bit chilly outside. You get to wear some nice warm clothing, make some stews, a lot of pumpkin spice lattes. Love all that stuff. So, nice to have you. Today we're going to look at the pound US dollar. Some interesting stuff happening with the pound US dollar, and wanted to show you how I look for trade signals, how we at the school look for trade signals. How do we take what we know to be true? Okay, we collect data. We collect data from the CFTC reports. We look at retail sentiment. We draw our institutional supply and demand areas. So we're essentially locating buying and selling from the big institutions on all the major time frames. So we're looking at, for instance, monthly, weekly, daily, 4-hour. Those are our main time frames that we're looking at, the buying and selling of the institutions. And so when we look at these areas, we try to determine, okay, what is in play? What time frame is the time frame that we should be watching? So how do we know that? Well, let's dig into it, and I'll show you some things that we teach here at the school. I won't go into too much detail. If you want to learn the details and go deeper, become a member. We have a full video library of lessons. We're doing live classes on a weekly basis, and you can learn a lot more. But let's first bring your attention to some of these charts. First things first, if I look at this 4-hour chart, you can see that price has been rallying up, and recently it just removed an area of supply. So this was an institutional selling area that we had located. Previously, the institutions used this area to facilitate a drop on price. And now when price is coming back up to it, it hit this area of supply, but eventually removed it. All right, so we know that supply on the 4-hour chart is not what is in play, because if it was, price would be making a drop like this, but it's not. So the supply here is not in play. So we go up one more time frame, and we get to a daily time frame. And as you can see on the daily chart, we also have an area of supply that is being contacted. Now, how do we know if this supply is in play? Because we can go up another time frame, and you'll see on the monthly time frame, we also have an area of supply in play. Okay? So we have a daily chart with supply, and we have a monthly chart with supply. Now, we have rules on how we deal with situations like this. Very clear rules. But I think there's going to be an opportunity for a short-term move to the downside, and a trading opportunity for us to take advantage of this move to the downside. So how are we going to do that? Well, there's a couple ways. So let's go over to the daily chart again. Now, if we were watching for, remember, each time frame represents a certain period of time, okay? Very important to know that. For instance, in our Arujo reports that we create for members, in the latest report, I'll skip through here and show you something right here, okay? In our Arujo report, we always include something here. Right here, okay? Direction, momentum. This is what we're dealing with here. To understand what direction price is going to move in and for how long it's going to move in that direction, this is a must. Understanding this is a must, okay? Short term equals hours and days. Midterm is days and weeks. Long term is weeks and months. Very long term is months and years. So what does that mean? Well, if you're looking at a monthly chart and monthly demand comes into play and we're expecting it to move to the upside, then it could be months and years that price moves up with that momentum. Same thing with midterm. If price comes into a daily or a weekly area of demand, we are expecting over the medium term price to head higher. And medium term is multiple days, multiple weeks, okay? Understanding this is very, very important. So let's get back to what we were looking at. Here's a daily chart. And as I was mentioning, we have supply being contacted. All right. So what else do we know about the daily chart? Well, if you look at the chart, you can see that we have an ascending trend line. Okay. So looking at this ascending trend line, we know it's not the greatest trend line because of certain principles and concepts that we apply to the charts to determine whether or not the trend line is a trend line that the institutions want to use to facilitate a move in that direction, in the direction of the trend line, or if it's not even being observed by the institutions. And most of the times, if it's not being observed by the institutions, they're being observed by retail traders. Okay, so we have an ascending trend line here, and we have price contacting an area of supply. Now, if price was to start using this area of supply to drop, then what we would be expecting is for this ascending structure to go from ascending to neutral. Now, what does that mean? That means the structure that was being created to create a structure where you could draw an ascending trend line is now going from pressure to the upside to pressure going sideways. Very important. The reason being is because when certain elements are in play, meaning there isn't a proper trend line for a trend, an ascending trend, and the momentum of price is to the upside, but the institutions break that momentum and put price in a range. What typically happens when price is in a range is the institutions are accumulating or distributing a position, okay? Accumulating or distributing. And that typically happens at institutional zones. Right now, we're contacting an institutional supply area. So if this supply were to come into play, this momentum to the upside would break, enter into some ranging, and what would we be expecting as price is in that ranging? That is the question. Well, let me bring you to some data on the CFTC. And if you've been watching our videos on YouTube, you'll see that every week we do a CFTC video. Well, not every week. Some weeks we skip. And if you watch the latest report that we did, you'd see that on the pound US dollar, we have, back in July, we saw institutions increase their maximum long positions up to 188,000. Since then, they took some profits, and we saw that on the charts, but price is now going higher. And what's happening? Now we have positions at 160. That almost reminds me of some of the indicators that, conventional indicators, I should say, where you have price coming up and you watch the indicator and it's very strong, and then it comes down and it makes a new high, but the indicator is showing a lower low. What do they call that again? I can't remember the term for that. It's been so long since I paid attention to that type of conventional analysis. But there is something about that where price is making a new high, but the power of that new high is a lot less. There is importance in that understanding, in the logic behind that. And I think that when we look at the CFTC data and we see that price is making new highs and the longs are less than what they previously were, what we've been seeing over the last few weeks since that high of 160 is profit taking, 142, 124. So there's profit taking on long positions. That is what we've been seeing. So it's safe to assume that if we see this ascending structure break out of its upward momentum into ranging at a supply zone on the daily time frame, we could be seeing momentum shift to the downside over the medium term. What is medium term? Many days, many weeks. So we're going to be watching for that break of this momentum to the upside, go into a neutral phase, and then we're going to be watching for the signal to the downside. It could happen, could not, because we also have to remember that monthly supply is in play. So this could play out over a longer period of time. But I have a sneaky suspicion that we might be seeing something over the shorter term. Okay. Hope you like bearish divergence. Yeah, divergence. There you go. That's the word I was looking for. Thanks, guys. All right. So I'll leave you with that. I'm going to continue recording for students, and I'll be posting this in the forum for students. If you want a chance to watch the extended version of this analysis, you can have access to that. I'll choose one person who goes onto my Twitter page and retweets or likes the post that I made about this session. All right. So that's it for now. Hope you enjoyed this inside look at the pound US dollar, and we'll talk to you guys soon. Okay. Thanks for joining me this morning.